Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Bonjour. Welcome to Cut to the Chase. This is Daniel Lam, your host for the podcast. Well, it's the middle of the week, and this is the time when I can get a bit philosophical. Dreams versus reality. That's a constant debate that can go on in the minds of many people. In investing, often we're looking for or dreaming about a certain outcome. But that outcome is not happening yet. And we need to deal with what is actually happening right now. In FX, we have been US dollar bears for quite some time. But it hasn't been happening. In fact, since last August, the DXY index has been climbing steadily from around 94 up to 109.27 last night, nearly testing the previous peak at 109.30. So why is the King dollar so strong? It's got a lot to do with the relative fundamentals in the US economy versus the rest of the world. So let's take a look at its main quote-unquote competitor in the FX space, which is the euro. And the euro makes up more than 50% of the DXY index. Now, recent developments have been negative for the euro. European benchmark gas prices have risen more than 40% since last month. And there was the unexpected closure of Russia's Nord Stream 1 pipeline, which literally adds fuel to the fire. Growth expectations are starting to wane, and inflation in the region is further exacerbated by severe rain shortages in Germany, leading to disrupted river shipping routes and elevated freight costs. Now, contrasting that to what's happening in the US, we are seeing reasonable growth data there. Earnings season has shown decent forward guidance, and inflation may be capping out. Technically, the euro rebound early this month did not manage to go above the 1.0443 level, which was the previous support turned resistance. Overnight, the euro broke below the previous low at 0.9950, paving its way to test the next support at 0.9850, followed by 0.96. Now, what should you, the investors, be doing if you're long euro? Well, it seems to be too late to be switching out of it now. But you can put the currency at work. A weak euro is actually good for the exporters. And we noticed that the European technology sector, particularly those in the semiconductor space, have been doing quite well lately. They've been benefiting from the recovery in growth stocks, which has been going on since June. And the semiconductor space continues to be in demand from structural growth in the electric vehicle markets, which Standard Chartered has been highlighting as a key long-term thematic since last year. That's all from me today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.